This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Welcome back. This is Not Your Advisor with NYU Grad on Friday, February 21st. I don't think it'll be a short session, folks, so buckle up. The market was down all day, so give me some grace on the timing. But let's jump right in. I'm going to try to do this as quick as I can today. And we'll break for the weekend. So we had 206 new highs on the NYSE versus 274 new lows. Not too bad. 21% were advancing versus 76% declining. That's not great. 50% were below the 50-day. 45% were below the 200-day. The Dow closed at the lows down 748 points. To me, it's not even a big deal, to be quite honest. It's 1.7%. Back in the great financial crisis, when the market was down, or the Dow was down 740 points, that was a big deal. That was like 4% moves at Dow 8,000 or something like that. Or in this case, at Dow 8,000, it would be almost 10% move, or 7% with a circuit breaker. The NASDAQ was down 438 points, 2.2%, getting a little bit juicier. The S&P was down 100 points, or 1.7%. Looking at mega cap, pretty much everything was red. The best performer of the Mag 7 was Apple. There were a lot of headlines for Apple today regarding what Trump noted about his meeting with Tim Cook and some confusion about bringing manufacturing to America. But whatever the case, Apple did the best of the Mag 7. The worst performer, there were actually two, and this is pretty concerning. And you had Tesla down 4.6%, NVIDIA down 4%, Alphabet down 2.7%, Meta down 1.6%, and Microsoft down 1.9%. I'm going to go over the day and the week performance. For the session, there was only one sector in the green, consumer defensive, and I am going to go over who those companies were that got best defended there. But every other sector for the session and almost every sector for the week are red. I repeat, almost all sectors are red for the session and the week. Today, leading to the downside, you had technology down 2.5%, industrials down 2.3%, basic material down 2.1%, consumer cyclical 2.1%, energy 2%, communication services 1.6%, financials down 1.4%, real estate 0.8%, utilities 0.6%, healthcare down 0.3%. For the week finished, it was a short, abbreviated week with President's Day, but to the upside, you had healthcare up 0.2%, utilities break even. That was it. Everything else was red. Communication services, which includes things like Meta and Alphabet, down 3.1%. Consumer cyclical for the week down 3%. Industrials down 2.6%, basic materials down 2.6%, financials 1.9%, technology 1.9%, consumer defensive 1.1%. Just a bloodbath. And a lot of this 1 week red performance happened today. Pretty bloody session and week. So for my lunch break, I went out to go get some salad at Sweet Green. It was about, 1 o'clock in the afternoon. And my Sweet Green is at the World Financial Center or Freedom Tower, and it is also the Sweet Green of many of the companies down here, of which include Goldman Sachs, Spotify, Uber's headquarters is down here. And I got to the location at 1:15, 1:10-ish, and to my surprise, there was not one customer in there. My salad, if you see in the photo, in the first photo, is the only salad waiting to be picked up all by itself. It wasn't like a 4 o'clock pickup. I went at 1 o'clock, The only people in there were the employees. And I put a little map of how far Goldman Sachs' headquarters is at 200 West Street on the West Side Highway. So I guess either everyone is at home working remotely when they're not supposed to be, or everyone at Goldman was chained to their desk. So I hope you enjoy those pictures. Just a quick reminder, 2 days ago, I did post everywhere that the VIX was getting closer to the bottom than the top. And I'm not shy or bashful about promoting myself. I could have helped you all if you were on the free side to avoid some of yesterday and all of today. So I urge you to take a look at the premium upgrade for the Substack and the podcast. I do have a poll. So there's been rumors on why we're selling off yesterday and today. And one of those rumors is this new strain of the coronavirus found in Wuhan, China, and blah, blah, blah. I don't think this is why we're selling off, okay? And I'm going to talk about that in a second. But I would like to know if there is another true outbreak of some type of pandemic, would you follow lockdown rules like COVID in 2021? And would you start to take vaccines that are semi-rushed to the market? And again, I'm not trying to get political here. I took vaccines myself. I'm caring for a father-in-law who has who's in remission, thankfully, but had multiple myeloma, and it was super important because if you don't know, and you don't know anyone that is on chemo, it degrades their ability to fight common colds or anything. And it was important for my wife and I to not catch COVID because during the lockdowns, we had to do all the grocery shopping for him. So it was super stressful. But anyway, I'm curious, if they lock us down again, right? If people start dropping like flies, convulsing on the sidewalks, would you follow lockdown and vaccine rules? I'd love to know. So in today's lengthy podcast for the premium subscribers, I'm going to cover what is causing the sell-off, what profitable companies in the NASDAQ went up today, what went down less today, areas to avoid, the Hims and Her fiasco. They dropped more than they have ever dropped, percentage-wise, today. The big picture view, the Mag 7, and the best defended stocks. However, I do want to continue with what was up and what was down today and what kind of stuck out to me. Tesla is screaming there's something wrong. And I'm going to get into that as well. NVIDIA reports next Wednesday, February 26th, after the market close. That's going to be a very important earnings release for the entire global financial market. Let's see. In the NASDAQ, we had 26 new highs versus 97 new lows. In my screener of the NASDAQ names that are profitable, there were only 11 companies that were making new highs today. That list is available via a link in the show notes for paying subscribers for those 11 companies. But I'm just going to state Gilead and Starbucks were on that list today. It doesn't mean that they closed at their all-time high, but they made a new high today. What was weak and what was strong in the S&P and the NASDAQ? So in the S&P, we actually had a ton of names to the upside. Moderna up 5.7%, Kenvue 4.2%, Hershey's 4.1%, Mondelez 4%, ConAgra Brands 3.8%, Archer Daniels Midland 3.5%, West Pharmaceuticals 3.5%, Monster Beverage 3.5%, Kraft Heinz 3.2%, Campbell's Soup Company 3.2%, American Water 3.1%, General Mills cereals and stuff 3.06%, Dr. Pepper, Keurig, soda, beverages up 3%, PepsiCo 2.8%, Hormel Foods, 2.7. Clorox, 2.7. J.M. Smucker, the jam company, 2.5. Tyson Foods, the chicken mutilator, 2.2. Northrop Grumman, 2.2. The NASDAQ 100. Mercado Libre up 7% again. PDD 5.5. Mondelez again 4. Trying to dedupe. Biogen 2.5. What was weak? This list is way too long. I'll cover into the 6%. Akamai down 21%. I can't even believe they're still in business. That's an old .com legacy tech company. Old Dominion Freight 8.5%. GE Vernova down 8.5%. Vistra Energy 7.6%. United Health Group 7.4%. EPAM Systems 7.2%. CrowdStrike 6.7%. Caesar 6.4%. Howmet 6.2%. Norwegian Cruise 6%. United Airlines 6%. MGM 6%. That's just a 6. I'm not going to go through all the 5s and the 4s and the 3s. That'll be an hour podcast. In the NASDAQ 100, Old Dominion Freight down 8.5%. Constellation Energy 8%. AppLovin 7.7%. Strategy Inc. 7.4%. Airbnb 5.9%. MongoDB 5.7%. Axon, I believe they make bullets, 5.2%. Datadog down 5.2%. Microchip Technology 5.02%. Trade Desk 4.8%. This list is long, so I'm going to leave it there. I'm going to continue on a little bit. So I mentioned I want to talk about sector analysis for consumer defensive and what was actually holding up here. So let's go into...
We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you. They connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to notyouradvisor.com.
And all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not Your Advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.